Welcome to Plato's Cave for our December 23, 2014 broadcast. My name is Doris Motormouth and I am your Poseidon news anchor. Asian stocks advance with metals on U.S. economic growth. Bloomberg. Asian stocks climbed with metals after data showed the U.S. economy grew at the fastest pace since 2003 last quarter. An index tracking the dollar declined for the first time in 6 days and bond risk fell. The MSCI Asia Pacific Index advanced 0.5% by 10:52 a.m. in Tokyo, with the Topix Index rising 0.9% after a holiday in Japan yesterday. Futures on the Dow Jones Industrial Average, INDU, were up less than 0.1% after the US gauge surged past 18,000 points for the first time. Australia's 10-year debt followed Treasuries lower, with the yield climbing 5 basis points. The yen rebounded 0.2% to 120.48 per dollar after sliding 3.6% over the last 5 days. The world's biggest economy grew an annualized 5%, beating the highest forecast among 75 economists surveyed by Bloomberg and indicating a sustained pickup in the US may help ease a slowdown globally. Stocks have been rallying since the middle of last week, when the Federal Reserve pledged patience over interest rate increases. Shinzo Abe will be confirmed as Japan's premier by Parliament today, while markets including Australia and Hong Kong close early. The market is taking some comfort from the power of the U.S. economy, Michael McCarthy, chief markets strategist at CMC Markets in Sydney, said by phone today. The calm from the Federal Reserve statement last week has been a major contributor to this rally, combined with the U.S. GDP data. Consumer boost. The annualized growth rate was revised up from a previous estimate of 3.9%, and was the biggest advance in U.S. gross domestic product since the third quarter of 2003. Separate data showed consumer spending rose more than previously estimated in the quarter, while orders for U.S. durable goods and purchases of new U.S. homes unexpectedly declined last month. Hong Kong's Hang Seng Index added 0.3%, while Australia's S&P ASX 200 index was little changed. The KOSPI index in Seoul rose 0.3%, while the NZX 50 index, NZSE 50 FG, was up 0.1% in Wellington. Markets in New Zealand also close early today along with Singapore and New York. The Philippines is shut. The Topix rose for a fourth trading day and is headed for a 9.5% advance this year. Abe will be confirmed as Prime Minister by lawmakers again today after last week's sweeping victory in elections. Winning a new term gives Abe the opportunity to become Japan's longest-serving premier in 40 years and allows him time to try to further his program of reform known as Abenomics. Christmas closures. Financial markets in the US, Europe and most of Asia will be closed tomorrow for Christmas Day. Japan and mainland China will be open. The Bloomberg Dollar Spot Index, which tracks the U.S. currency versus 10 major peers, slid 0.14%, after increasing 0.5% last session to the highest close since March 2009. The euro rose 0.1% to $1.2182 following yesterday's 0.5% retreat. Australia's dollar was up 0.2% to 81.17 US cents, and the New Zealand dollar climbed 0.2%. The won weakened for a second day, losing 0.2%. The U.S. economy is in decent shape, so the market is expecting the Fed to raise interest rates by mid-2015, said Masato Yanagiya, head of foreign exchange and money trading at Sumitomo Mitsui Banking Corporation in New York. Demand for the euro was limited as Greek Prime Minister Antonis Samaras failed to get support among lawmakers for his choice, Stavros Dimas, for president. Australian government bonds due in a decade yielded 2.87%, with rates rising for the first time this week. Similar maturity treasuries were little changed at 2.25%, after yields jumped 10 basis points, or 0.10 percentage point, last session. The cost of insuring corporate and sovereign bonds against default in the Asia-Pacific region declined, credit default swaps traders said. The market tracks Asia slipped 1 basis point to 102. Copper climbed for the first time in 3 days and was up 0.2% to $6,340 a metric ton. Zinc gained 0.4%, while nickel rose 0.5%. WTI crude slid 0.2% to $57.04 a barrel, pairing a 3.4% advance yesterday. Oil inventories in the U.S. probably dropped for a second week through December 19, A Bloomberg News survey of energy analysts showed before data due from the government today. Canada dollar trades at almost 5-year low as U.S. economy surges. Bloomberg. The Canadian dollar traded at almost a 5-year low after a report showed the economy of the U.S., the nation's biggest trade partner, surged the most in a decade in the third quarter, outpacing gains in Canada. The loonie, as the Canadian dollar is known, fluctuated amid a rally in crude oil, the nation's biggest export. The currency weakened earlier even after a report showed Canada's gross domestic product grew 0.3% in October from a month earlier, more than forecast. The annualized 5% climb in U.S. GDP added to speculation the Federal Reserve will raise interest rates before the Bank of Canada. It really shows the U.S. diverging from other developed economies, like Europe and Canada. Matt Weller, an analyst at Gain Capital Holdings Incorporated's Forks.com in Grand Rapids, Michigan, said by phone. It's showing that the U.S. is pulling ahead of the pack. The loonie, nicknamed for the image of the aquatic bird on the $1 Canadian coin, depreciated as much as 0.3% to 1.1667 Canadian dollars per dollar before trading at 1.1617 Canadian dollars at 5 p.m. in Toronto, up 0.1%. It reached 1.1674 Canadian dollars on December 15, the weakest level since July 2009. One loonie buys 86.08 US cents. The Bloomberg Dollar Spot Index, which tracks the greenback against the currencies of 10 U.S. trading partners including Canada, rose 0.5% to 1,133.13, the highest close since March 2009. Bonds fall. Canadian government 10-year bonds fell for the first time in 3 days, pushing yields up 11 basis points, or 0.11 percentage point, to 1.90%. They touched 1.92%, the highest since December 8. Economists surveyed by Bloomberg forecast Canada's economy would grow 0.1% in October, after a 0.4% monthly gain in September. Canadian GDP expanded 2.3% from a year earlier, compared with a revised 2.4% the previous month and a forecast of 2.1%. The U.S. economy's gain from July through September compared with a Bloomberg survey's forecast of 4.3% and a previous estimate of 3.9%. The Fed signaled December 17 it's on course to raise U.S. borrowing costs in mid-2015 amid economic improvement. Bank of Canada Governor Stephen Poloz said earlier this month falling oil prices would damp growth and inflation. Crude rose 2.5% to $56.62 a barrel in New York. The loonie weakened for the past 4 weeks as the commodity dropped, reaching a 5-year low of $53.60 a barrel in New York on December 16. It traded at $107.73 a barrel on June 20. Credit raters said to bend own rules in annual SEC report. Bloomberg. Credit raters failed to follow their own methodologies, let senior credit officers view market share data and allowed a trade group to effect criteria changes. According to a report from the U.S. Securities and Exchange Commission, the SEC's Office of Credit Ratings didn't name specific companies in its 4th annual examination report released today, which looked at business practices in 2013. The report only refers to the raters as either larger firms, such as McGraw-Hill Financial Incorporated, MHFI, S. Standard & Poor's, Moody's Corporation, MCO, S. Moody's Investors Service and Fitch Ratings, or smaller ones, including Kroll Bond Rating Agency Incorporated and DBRS Incorporated. The regulator also didn't identify firms in its prior reports. One large company and 4 smaller firms didn't follow their own methodologies in determining ratings, the SEC said in its report on nationally recognized statistical rating organizations, or NRSROs. After reviewing emails of one of the larger raters, the regulator determined that business and market share conditions influenced the substance of its criteria. Employees on the business side of this rater worked in a concerted effort to change the criteria to appease an industry trade group, the SEC said. At one of the larger companies, the chief credit officer reviewed non-public information about its revenue, financial performance and market share even though its policies prohibit such employees from accessing this information. The SEC began filing its annual examination reports after Congress passed the Dodd-Frank financial reform law in 2010, instructing regulators to stop relying on ratings and increase oversight of the companies that issue them. The Financial Crisis Inquiry Commission blamed the firms for awarding top credit grades to risky mortgage bonds, helping ignite the worst recession since the Great Depression. Meredith Whitney's fund sued by billionaire Platts Blue Crest Bloomberg. Meredith Whitney's hedge fund is being sued by its biggest investor, a fund connected to billionaire Michael Platt's Blue Crest Capital Management, as demands to recoup money spill into court, according to people with knowledge of the dispute. Platt's Blue Crest Capital Opportunities brought the lawsuit in Bermuda last week, seeking to get back its $46 million stake in Whitney's American Revival Fund, the people said, asking for anonymity because the case isn't public. Her hedge fund slid 11% this year through November despite a rising stock market. The suit shows how quickly relations have soured since last year, when Platt helped Whitney, once one of Wall Street's most famous analysts, start her new firm, Kinbell Capital. The Blue Crest Fund invested $50 million that November, then asked to redeem this October, expecting payment around the end of last month, the people said. A lawsuit was filed in Bermuda, contrary explicitly to a contractual agreement that any lawsuits or legal disputes would be resolved here in New York. Whitney's attorney, Stanley S. Arkin, said by phone. Asked what prompted the redemption demand, he referred to Blue Crest's own returns and client withdrawals. Feels insulted the Bermuda court doesn't make case filings public. A clerk there confirmed this week that the Blue Crest Fund filed a suit against American Revival, and declined to provide a copy. It's been an unusually hard year for fledgling money managers, with institutional investors flocking to the biggest players, and hedge funds closing at a rate not seen since the financial crisis. On average, hedge funds returned about 2% during the year's first 11 months, according to data compiled by Bloomberg. Whitney aimed for returns of 12% to 17% by profiting from growth in what she called America's heartland, a presentation showed last year. Instead, her fund was down in 8 of the past 11 months, according to its returns. The Standard & Poor's 500 index climbed about 12% over that span. Top Kinbell executives including the chief financial officer and a co-founder have left, and her full-floor office in a high-rise on Manhattan's Madison Avenue is now listed for sublease, with furniture available. Blue Crest's fund told the Bermuda court that it initially received a message from a Kinbell executive accepting the redemption request, according to the people with knowledge of the suit. The expected payout date came and went. The lawsuit, which claims American Revival violated agreements, doesn't name Whitney or any executives as defendants, and seeks to redeem the stake along with unspecified costs and other relief, the people said. I will tell you, she feels insulted, Arkin said. She really feels offended. Thank you for listening to Plato's Cave. See you tomorrow.